Good afternoon. I want to welcome you once again to this channel. The last video, I started and I stated this topic correction of errors that you are seeing on the board. In last video, I gave definition to this topic correction of errors, and also I went further to talk about the categories of errors that an accountant can make in the books of accounts. In that video, which I spoke about categories of errors, which are errors that will not affect the agreement of the trial balance, and errors that will affect the agreement of the trial balance. And in that video, also, I went further to talk about some examples of errors that will not affect the agreement of the trial balance. And some of them, if you have to go back to the last video, you're going to see many of the errors like 6 or 7 errors that I mentioned, that I explained also in the last video. And some of them are errors of commission, errors of compensating error, errors of principal, errors of original entry, complete reverse of entry, and a transposition error. So those are the errors that will not affect the agreement of the trial balance. And you definitely still remember a little about our balance, that our balance is a statement that must have the two totals at the bottom at the end of all the items to be equal. The two totals must be equal. So if the two totals continue to be equal, to be the same thing, and there are the errors in the books of account, it means the first category, the category of errors that do not affect the agreement of the balance occurred. And that took us to this illustration. And this illustration will give us the insight, the idea about how to deal with errors that will not affect the agreement of the trial balance. At least if you make any of these errors, your trial balance will still have the same total at the bottom. Now, let's look at this illustration, correction of errors illustration. This is an illustration. This is found in the book of Sports Limited for the month of January year 2000. Now, I'm going to quickly solve this, and I will explain how to solve any other question that you might likely come across when you are dealing with this topic in the future in this field. Now, it says January 1, an amount of 400 naira was debited to carry out us when it should, please take note of this, when it should have been charged to Ben's account. This is where it's supposed to go, to Ben's account, but mistakenly, this money was debited to carriage outwards account, was mistakenly debited to carriage outwards account. And you can still remember the rules of the trial balance. Carriage outwards is an account that's supposed to have credit balance, because this account is always giving out. This account is always giving out. So carriage outwards is an account that's supposed to have credit balance, but it was debited with this figure. It was debited with so when it should have been charged to Ben's account, which means this figure, the current item is supposed not to appear at all in this transaction, but mistakenly it was opened and 400 naira was charged to this account, debited to this account. Now, what you have to do to correct this error is that since this account had been debited with this fund now, and you have been informed that it should have gone into this first account, then you have to do the opposite of what had been done by crediting this carrier towards account and now debit this account. So we are going to credit this account and debit this account. I believe you understand, or you know the reason why we are going to credit this account, because it was previously debited, and whereas it's supposed to go into this account, the debited is supposed to go into, but this account was opened mistakenly, and now was debited in this account. So we have to credit this account now to reverse that action. So I will now say that January 1, January 1, so I'm going to, it was debited, so I'm going to credit this account now. Carrying that was will now be credited carriage outward will now be credited with 400 naira. And this other name, there is account, which ought to have been debited initially, will now be debited. Ben's accounts. Now be debited. Now, having resolved this, having know what to do, guys, we have to credit outwards and debit Ben's account. Then what kind of error is this? Actually, all the errors made here are errors that will not affect the agreement of the traveler because the same error was made at the debit side and the same error was made at the credit side. So the same figure, the same error was made at both the debit side and the credit side. So this error will not affect the agreement of the traveler, but irrespective of this, we still have to identify the type of error that was made. Now let's look at this. This is carried out to us an item that's supposed to be, this is an item of nominal accounts. This is an item of nominal account. This an item. I'm talking about classification of accounts. I'm already taking you into classification of accounts. This is an item classified to be under the nominal account. And this is an item classified to be under the personal account or the Ben's account. Now, so this is what error can we call this? This is an error of principle. This is an error of principle. And this error of principle involves error made in wrong classification of accounts. So this is an error of principle. So you can give direction using your English extracted from the translation given to you, or if you are sure of the type of error that it is, you can just say be an error of so. But if you are not sure, you can just extract the narration from the transaction. So I can extract from the narration from the transaction, or I can just say the type of error that it is. Be an error, being an error of principle. Being an error of principle. So I can end this like that. Since I'm sure it's an error of principle, or if I'm not sure, if you're not sure, if it's what we will do is, if you're not sure, then you can just extract your narration from the transaction. You can simply say, and it's not possible that your narration should be the same with my narration. So you can simply say, being an error debited to credit actions when it should have been charged Ben's account, now corrected. So it's okay like that also. Be an error debited to credit actions account when it should have been charged to Ben's account, now corrected. So as simple as that. It just depends on how you can express yourself in English or the language you are using. Now let's go to the next transaction, which says Bishop got on January 4. And it says F. John's account was incorrectly debited with 4,000 naira. Please take note of this. F. John's account was incorrectly debited with 4,000 naira. Which should be debited to F. James. And this should have been debited to F. James, but it was mistakenly debited to F. John's account. Whereas which means F. John, this name, F. John was introduced here mistakenly into this Sports Limited book. So we have to identify what type of error is this. We know that this is an error that will not affect the agreement of the trial balance because F. John's account was already debited. Someone was debited, whereas we supposed to have debited James. Anyhow, for someone was also debited. Now, let's pick out the major accounts involved here. What are the accounts involved? We have F. John's account and we have F. James account. So F. John's account was specifically brought to this account. F. John's account was specifically brought to this account. Whereas the correct account is supposed to be F. James. Now, this is an error that we call error two names now. You can see the first two names. We have F James, we have F John. So this is error that affect two names. If you go back to the types of error that do not affect the agreement of the servant, we have the error that is saying, or error that affects, that involves wrong person's name. Wrong person's name. So let's quickly correct this one. F John's account was incorrectly debited. If F John's account had been incorrectly debited, then how do we reverse this account? Is by crediting it now. It was previously debited mistakenly. This person's name account was debited mistakenly. Brought into this book, debited mistakenly, then we credit this account now. So January 4, that is F John, F John's account. That is, the amount is 4,000 naira. And F, okay, must be created, sorry. Must be created now because it was initially previously debited, so we have to create this now. Then F James, the correct name that's supposed to have been debited initially, which was not debited or omitted. That is, we have to put it in now. F James account, which for 1,000. This is an error of commission. This is an error of commission, being an error of commission. Being an error of commission. Being an error of commission. I told you that if you are sure of the type of error that the translation is talking about, you can simply use that, being an error of commission. But if you are not sure, or if you are not really sure, then you can just extract the narration from the transaction. You can say, being an error debited to F John's account, now instead of being an error debited to F John's account, instead of F James' account, now corrected. So I'll repeat this again. Being an error debited to F John's account instead of F James' account, now corrected. So let's go to January 6th. The transaction that occurred on January 6th. It says January 6th. It says returning was from Stanley was entered in Jake's account. Returning was from Stanley was entered in Jake's account. Now we have to identify the account involved there, entered in Jake's account. You can see that this is a name. This Jake's account was mistakenly brought into this account again. Where this Jake's account is supposed to even supposed not to appear at all in this book at all, but mistakenly this transaction was recorded in this Jake's account. So, and we have to reverse this we have to reverse this transaction from this Jake's account in order to close this account which was not supposed to be in this book. Jake's account. Now returning was from Stanley. Stanley gave out 300 naira. So Stanley is supposed to be credited, but it was entered in Jake's account. Automatically, if Stanley is supposed to be credited, automatically returning was will have been debited. If Stanley is supposed to be credited, returning was will have been debited. Why this one is supposed to be credited? But the credit entry was now recorded here, not in Stanley. Was mistakenly recorded here. So the credit entry was there. There was no mistake in the returning was, because this English is not even emphasizing on returning was. So which means there was no mistake in returning was, but on Stanley's account and Jake's account. And Jake's account was credited. Then we have to debit this account to close this account. Jake's account must now be debited. This account must be debited. We with that figure of 300 naira. And Stanley's account must be credited. Stanley's account must be credited with that figure of 300 naira. With that figure of this is similar to the last transaction, the last error. So you can see it involves two different names, Jake's account and Stanley. And these are puzzle name. So this is also similar to error. This is also the same as error of commission. Error of commission says error committed that involves names of people, two names of people, or names of people. Now, so we can simply use that also. Being an error of commission. Being an error of commission. And that's there. Then, and if you don't want to say being an error of commission, you can frame your English from the transaction. It only was from Stanley was entered in the James account. Being an error of returning was from Stanley, which was recently recorded in this account, now corrected. Being returning was from Stanley. Being returning was from Stanley, mistakenly entered in James account, now corrected. As I said, your narration is not necessarily supposed to be the same narration with me. So, because our understanding, the way we speak, our language is different from the way you are going to speak is going to be different from another one. So, it is not proposed that we should have the same method or the same way of expressing ourselves in the language we are speaking. So, let's go to the next transaction which occurred on January 10. January 10, it says, 6 to 10, 107 was entered in the book as 701. 6 to 10, 107 was entered in the books as 701. This is an error of original entry. So the process, it means correct debits and credit entry was made, correct debit recording and credit recording was made. So were made. So what's run figure? What's run figure? 107 is the correct figure, but 701, 701 had been inserted and it has gone into it has mixed up with all other figures in the account. So how do we correct this one? Let's first identify the two accounts involved there. We have sales accounts and we also have ends accounts. These are the two accounts involved, sales account and ends account. We can still remember sales account in the ledger or in trial balance. Sales account used to have credit balance. Why? Because all entries, most of the entries of sales accounts used to be at the right hand side, which is the credit side. So most transactions that used to occur on sales used to be at the credit side. That is, it used to have most of entries at the credit side. We have the debit side and the credit side. So sales account used to give out always. So that's why most of the entries used to be at the credit side. And we used to say sales account used to have credit balance. Now, let's start from there. If sales account used to have credit balance, or it's an account that must have credit balance, so it means that sales account at the credit side is having this figure of 701 instead of 107. The credit side of sales account is having 701 instead of 107. I'll repeat again. The sales account, which is an account that's having a credit balance, that is all the entries are at the credit side. At the credit side of sales account, we have 701 instead of 107. So there is an excess figure or excess amount added. Too much figure had been added there instead of this. So let's find the difference between 701 and 107. So 701 and 107. Let's subtract. We have 11 minus 7. We have 4. Then we have 9. And we have 6 minus 1, 5, 9, 4. So the difference between The difference between 701 and 107 is 594, which means 594 had been added to the credit side of the sales account. Had been added to the credit side of the sales account. So we have the credit side being too much by 594. How do we correct this? Is by putting that 594 at the debit side of the sales account to reduce what had been inserted at the credit side of the sales account. So I'll repeat it again. Only 594 must be recorded at the debit side of the sales account because 701 had been inserted at the credit side of the sales account. Whereas you're supposed to have 107 here. So if we now put 594, it will automatically reduce this 701 that had been inserted before down to 107. So we'll be able to have only 107 less at the credit side of 107. So which means sales account must now be debited, must now be debited, sales must be debited with this figure 594. 594. Why credit account also we now credit accounts. Why credit accounts will now be credited with 594 because credit account is Mr. Kent is a receiver, so his account was having 701 instead of 107. So yeah, if you go at the debit side there, has been increased to 701 instead of 107. By how much? By 594. We have to subtract 594 from the credit, put it at the credit side, in order to subtract it from the figure that was written there as 701. So this is January 10. January 10. 10. So as I said, this is an error of original entry. Being an error. Being an error of original entry. Being an error of original entry. So let's now go to the next one, which is January 18. January 18. January 18 says, both purchases and return outwards accounts were undercast. Both purchases and return outwards accounts were undercast. Now, in this transaction and this area now, two accounts above have been mentioned easily there, this account and return outwards account. And if you can still remember a purchases in the ledger and also in the trial balance, purchases account is an account that used to have debit balances. I used to have debit balance. So which means for this account, all entries in the credit account used to be at the debit side. At the end of the day, the debit side used to be more than the credit side. That's why this account used to have debit balance. And return outwards is an account that used to give out. Credit they give out for giving out. It's an account that used to give out. So for giving out, this account used to have credit balance. That is, most of the items, most of the credit used to be at the credit side. So they're supposed to have credit balance. Now, this error now says both purchases and return outwards accounts were undercast by 15. This is compensating error. So the two accounts must be compensated because they were undercast by 150. So the balance they are having, the side where they are having the balance, the add back, be compensated because they were shortchanged by 150. That is, the debit side of the police account was reduced by 150 mistakenly. And the credit side of return outwards, since we know that return outwards is an account that used to have all entries on the credit side. So it's an account that used to have credit balance. So the total of the credit side had been reduced mistakenly by 150. So we have to make it up at that credit side by adding 150 to that side. So the credit account, we add 150 to the debit side. This one, we add 150 to the credit side. So that's transaction that occurred on January 18. January 18. For this account, the account that must have debit balance, and we have to add, it has been reduced mistakenly. So we add 150 back to it because it says on the cast. And we also have the return outsource accounts, which is an account that you give out most often. Return outsource accounts, outsource accounts, outsource account. These are used to give out. But the credit side has also been undercut by 150. So the credit side we add additional 150 to that side. So being compensating error. Error. Being compensating error. Or you can simply say, using your English that or your language, that being purchases undercut by 150, likewise it turned out was undercut by 150, now corrected. So you can say it in your language or in a better way and to understand it. You can remember that it's a compensating error. Now let's go to the last one, which is the error that occurred on January 24. Cash paid to Sam 1,000 naira. Enter the credit side of his account. Cash paid to Sam. This Mr. Sam is receiving money. So it's supposed to be, for receiving this money is supposed to be debited to Mr. Sam because